Good morning. My name is Jason Paltrowitz, Executive Vice President of Corporate Services for OTC Markets Group, and welcome to our webinar on understanding the amendments to Rule 15C-211. I'm joined today by Daniel Zinn, our General Counsel, Cass Sanford, our Associate General Counsel, Liz Hess, our Chief Compliance Officer, and Christy Harkins, our Chief Marketing Officer. A couple of housekeeping rules before we start. This is being recorded, and we will make this available to all registrants as well as posting on our website tomorrow, so you'll be able to listen to this again. All of you who are attending are in mute mode, so you will not be able to ask questions verbally. However, you'll see on your webcam dashboard the ability to enter questions as you wish. Depending on the amount of questions we receive and the number of questions, or the number of questions that come in and the types of questions, they will be curated. So we'll try to, where we see common themes, put them all together, and they will be curated and asked by Christy of us, following what we hope will be about a 20-minute presentation to run through the rules. So we are going to leave ample time for Q&A, assuming there will be ample Q&A. So with that, why don't we kick off onto the first slide. So in essence, Rule 15C-211, or the amendment to Rule 15C-211 that was passed by the SEC late last year, really lays out the requirements for what issuers are going to have to do in order to maintain their public quote on the markets that we operate, our QX, our QB, and our pink markets. There are 11,000 plus securities that are currently on our markets. And when we think about the depth and breadth of those securities, we're going to bucket them into really three different types. And so as we go through this, we will talk about the rules as it relates to the community banks that trade on our market, the US securities that trade on our market, and then the international securities that are cross-traded here from Canada and around the world. The basis for the disclosure that we're talking about in order to maintain your public quote really are formed, or the SEC formed them through the disclosure standards that we currently have for our OTCQX, our OTCQB, and our pink current and limited markets. So as we're thinking about what issuers are going to need to do, think about it in terms of the market you're already on, or the markets that you might want to be on, given how this rule is going to affect you. So for our issuers that are currently on OTC, QX, and QB, you're kind of there, right? The rules that we've put forth, the standards that we have in place for those markets will match what the SEC is prescribed for Rule 15C-211, and you're gonna be okay. As it relates to companies on our pink current, pink limited, and pink no information tiers currently, those things are going to change a little, and the effect of that will change once this rule goes into effect, and we'll talk through those things. Again, because we're into different types of companies, as you'll see, companies that make their disclosure via EDGAR, so that would be US companies that are SEC reporting, or international companies that are listed on an exchange that require English language disclosure, or companies that utilize our disclosure news service, DNS, or you might know it as OTC IQ. All of those companies that go through either of the, or any of those three, will remain pink current or higher, right? QX, QB, or pink current or higher. For the remainder, we'll talk about where you'll end up and what that will look like on a post-September 28th world, right? This rule goes into effect on the 28th. So while many of you may have seen a June 30th deadline, that deadline was really put in place so that we could get the required documentation from you to give us ample time to be able to work through those applications and do the work necessary to make sure that you're in place for that September 28th deadline. So with that as the introduction, again, please feel free to ask questions in the question box. I'll now turn it over to Cass Sanford, who will run through the next couple of slides. Cass?
Thanks, Jason. Good morning, everyone. Thanks for joining us today. As Jason mentioned, I'm going to review some of the changes that you can expect to see in the next few months before the September 28th compliance date and on the compliance date. So one of the key investor protection objectives of the SEC's amendments to Rule 15c211 was to ensure that companies provide current disclosure to investors in order to maintain a public market. The rule, as it stands now, really only requires a broker to review current information when a security begins to be quoted, but it does not require the information to be current on an ongoing basis. So beginning on September 28th, all companies will be required to make current disclosure in order to maintain a public market. What this means is that the no information securities that you see on our market now will need to become current before the compliance date, or they'll lose eligibility for public quoting. Moving on to the second point, the rule now permits us to conduct an initial information review and bring companies onto our markets. We will also have the ability to request a symbol from FINRA as part of this onboarding process. Once we determine that an issuer meets the initial review standards, really any broker can jump in and quote this security after that point, and can quote on an ongoing basis as long as the issuer continues to meet its ongoing disclosure obligations. Note that brokers will still be able to initiate quotes independently and file a Form 211 with FINRA under the traditional process that exists now. The rule just really now provides for another pathway to reach the public markets through a review by the market operator. Finally, we'll also be able to use these compliance determinations that we're making when we're determining whether or not a company meets the disclosure standards to let brokers know that they can quote the security. So both on that initial basis under the initial review standard, when a security is just being quoted for the first time, and then also on an ongoing basis, we will be able to confirm that a company is current in its disclosure obligations, and we'll publish those determinations on our website and through our market data feeds, so that brokers and investors and the industry at large can really see which securities are meeting the requirements under the rule. Now, if we can flip to the next slide, I will review a few categories of issuers that Jason mentioned earlier and go into a little bit more detail about how they're impacted by the new current information requirements. So just to reiterate, the rule really recognizes three core categories of disclosure that Jason introed. First, information that's filed through EDGAR. This includes full SEC reporting companies as well as Regulation A, Regulation CF, and certain insurance companies. The rule also recognizes a foreign private issuers disclosure that's made publicly available in English. And the rule finally, for companies that don't fit neatly within those first two categories, the rule provides for a catch-all list of information that can count towards the current information requirements. So for domestic companies based here in the US, that they can either file reports with the SEC through EDGAR, and that, assuming they're timely, will satisfy the current information requirements. For companies that are not SEC reporting and did not file reports through EDGAR, these companies will need to engage with us to publish information through our PINK disclosure guidelines. This includes financial information, information about officers and directors, and other kind of key company information. It's worth noting, though, that the rule does permit, the actual Rule 15c211 does permit issuers to publish disclosure on their own website. However, if the information is not available on EDGAR or through your home company exchange, we do require that information come through us and our disclosure and news service. It's very similar to how the SEC requires that information be published through EDGAR so that they can confirm that it's meeting those requirements. The next category of impacted companies is banks. So with respect to non-SEC reporting banks and bank holding companies, the rule does not specifically recognize bank and bank holding company disclosure that is made to the banking regulators, such as call reports, Y6s and Y9s. Instead, under the rule, banks are treated as catch-all issuers, similar to these non-SEC reporting domestic issuers. So that means that they must make those same pieces of information available to the public, and they can do so through our disclosure and news service. For companies that are based outside of the US that are listed on an exchange in another country, these companies can rely on the disclosure framework of Rule 12G32B, which the core requirement there is that all information be published in the home market in English and available to US investors. Companies that trade on an English language stock exchange that requires English language disclosure, like the London Stock Exchange, Toronto Stock Exchange, and many others, those companies that are meeting foreign exchange requirements will remain current under the rule. I'll note with respect to international issuers, the rule also contains an exemption from the current information requirements for larger issuers that meet volume, asset, and shareholder equity. Note, though, that issuers that are only relying on this exemption will not be marked as current. They will rather be marked as limited information. Finally, just a note on shells. The rule does significantly restrict the ability of shells to be publicly quoted on an ongoing basis. So companies that are publishing their shell status in their disclosure documents will only be quoted for a limited period of time, 18 months, after that initial quotation. And this is regardless of whether or not the company is current in its disclosure requirements otherwise. So for any issuers that are shells and have that shell status included in their disclosure as of September 28th, the 18-month clock applicable to shells will start on the 28th. Now, I am going to turn it over to Dan Zinn, our General Counsel, to review some of the key takeaways, as well as some dates, other compliance considerations, and anything else I missed.
All right, thanks, Cass, and thanks again, everybody, for joining. I understand there may be some audio issues, so I'm going to project as best I can, and hopefully you can hear. Just to follow up on some of the points that Cass was making with respect to our disclosure, or the disclosure that's required of companies that want to have a continued quote on the market. There is, as Cass noted, somewhat of a difference between what the rule requires and what we, OTC Markets, are requiring. And I just want to acknowledge that. For a company, for us to feel as though we are meeting our compliance obligations under the rule, and that's really what a lot of this rule is about. We need to ensure that we're doing a review that we can make publicly available to everyone. And that's why we're requiring that companies publish their information through our DNS product, or obviously on OTCQX or OTCQB, even though the rule in some circumstances makes it possible for companies to make that disclosure available on their own website. That's why the big change to the rule is that we now have the ability to do this and to qualify companies, both for initial and ongoing disclosure, while also still leaving in place the existing process where a broker files a Form 211 with FINRA. So both of those avenues are available. Jumping to the slide that you all see now, Jason referenced this in his remarks, that we have put out a lot of information, I'm sure many of you have seen, regarding June 30th. Obviously we're at July 1st, so let me talk about why that timing existed and what happens now. The purpose of the messaging around June 30th was, as Jason noted, to indicate that we know there's going to be a lot of applications and a lot of information to review. And so to ensure that we can get through not only the application process, but also the information review, we ask that you get your application in by June 30th. That gives us roughly 3 months before that September 28th compliance date to go through the process and ensure that a company meets its obligations. We are, of course, incentivized and very eager to do as many of these reviews as we possibly can in the time between now, July 1st, and September 28th. That you can see on the slide, where we are estimating about a 6 to 8 week application process. That's to gain access to the disclosure and news service, or as Jason noted, to the OTC IQ product. It accomplishes the same thing. And so there will come a point, or there's likely to come a point, where we will not be able to get to somebody's application and review prior to September 28th. And so when we talk about what happens to companies that are in the no information category, as of that time, that may apply to some of those companies. We are going to continue to put out as much information as we can around timing and how that looks, in particular with individual companies that find themselves in that circumstance. But the kind of moral of this is, if you are considering taking this action, we strongly encourage you to do it as soon as you can. Those that fail to get there, and that can be people that don't choose to apply for DNS or otherwise make their information publicly available, will, as Cass noted, and I think Jason as well, lose their public quote on September 28th. It's a point that's worth repeating. That is the compliance date for the rule. And so regardless of things like the expert market that I will talk about in a moment, there is no ability for a broker to publish a public quote in a security that does not have current information as of that date. What happens then? So a company that has been removed from the publicly quoted market under the rule, again, this is a place where we are just following the way the rule sets up. This is not an additional requirement that we're setting up. A company that no longer has a public quote can continue to exist, right? They can continue to have investors attempt to trade. There just won't be that kind of price discovery and level of best execution or assurance of best execution that people are used to. They can also apply to return to the quoted market. And that's, you see referenced on the slide, an initial information review. That is a different standard. It's a slightly higher standard than what Cass described for our ongoing information standards, where we're reviewing solely that the disclosure continues to exist. But once we perform that initial information review, or once a broker files a form with FINRA, a typical 211, and that security is cleared, you can begin having a quoted market again. When it comes to us, to OTC Markets, doing that initial information review, we are going to have some standards in place for what we're able to handle. So things like audited financials are likely to be required for us to do an initial information review. We'll put out continued information about that as well, including to folks who apply for DNS in the period between now and the compliance date in September, but just want to make everybody else aware of that as well. That last bullet point is something that's worth spending a moment on as well before we turn this to questions. The SEC proposed what's called an expert market towards the end of 2020, something that we've been working on with the SEC for quite some time as well. As I was talking about what happens on September 28th, that is the operation of the rule. So all of these companies, or any company that's impacted, loses its public quote. If there's no expert market, if there's no additional solution, that's just the way the world will look, and we'll be prepared for that should that be the case. The expert market would be a place to provide for an electronic record for some degree of price discovery, for brokers to communicate with one another, for companies that don't meet that current information standard, that once complied and that for whatever reason have fallen off or fallen out of compliance. We are monitoring and working with the SEC as closely as we can to see if this expert market will ultimately get approved. We will certainly inform everybody as soon as we know. The difference really between a company that's on the expert market and one on the publicly quoted market is the absence of information. And if you're on the expert market, if that security is on the expert market, investors won't see quotes. You won't be able to log on to your retail brokerage account or look on Yahoo Finance or Google Finance and see a quote in the security. So it does have a significant impact either way. With that, I think we've hit that roughly 20-minute mark that Jason referenced earlier. I think we can turn it over to Christy to help us moderate through the list of questions.
Hi, everyone. We've actually had a lot of questions come in, many of which are very specific, but we'll try and answer as many of these as we possibly can. The first set of questions, and I know you guys touched on this, maybe if you could just reinforce, were around what this rule change means for QX and QB companies. So you could just maybe, Dan, just touch on, or Jason, the implications for those companies?
Sure. So this is Jason. Thanks for the question. As I said in the opening, the good news here is that the OTC, QX, and QB rules, or let me flip it. In essence, the SEC guidelines for what's required to be current in your disclosure very much match our OTC, QB, and QX rules. So if you are an OTC, QX, or QB issuer currently, you are in compliance. On September 28th, you are fine. Those rules match, and you will continue to have your public quote on our OTC, QX, and QB platforms. You will be, in order to maintain that public quote on OTC, QX, and QB, you'll just need to continue to do what's always been required of you as an OTC, QB, or QX issuer. So there will be no change. This rule really impacts companies that are currently on our pink market.
Thanks for that, Jason. So we have a couple of questions in kind of potential scenario areas. So one, maybe Dan or Liz, you guys can take this, is around what happens if a company becomes delinquent subsequent to the rule going in effect, and will the issuer, lose their public quote status? So maybe you can talk a little bit about how things work post September 28th.
Sure, and I can jump in, and then Liz, if there's anything I missed or anything you want to add, obviously feel free to jump in as well. It's a good question, and I think it's important for people to understand. We focus a lot on September 28th, but this rule is going to exist in perpetuity after that. So there is always this continued information requirement under the rule. That was really the purpose from the SEC standpoint of passing the rule. And so if a company goes delinquent, no longer has current information at any point after September 28th, they would lose their public quote and go either to the expert market or otherwise trade without access to that public market.
And Dan, just as a follow-up to that, another sort of specific question is around, if there's some kind of change of control, reverse merger, anything that happens kind of subsequent to that date. Does that trigger a new review, or how would that flush out for companies that are currently pink current and SEC reporting?
So it's similar to the way the rule works now, right? Once you have a quote, you've already gone through, the company has already gone through this Form 211 process with FINRA. There are certain circumstances where the company or the security becomes something different. Certain types of business changes or business combinations where FINRA issues a symbol change, or there are QSIP changes or other mechanisms that indicate that this is not the same security or not the same company. In those circumstances, now, even prior to this, the amendments to the rule, a new Form 211 would be required and a new review. The same rule sort of applies going forward, where if the extent of the change is such that it's a different security or a different company, then yes, a new review would need to take place. If it's a more standard sort of change that is not really changing the nature of the security, then it would continue to persist just as it does now.
That's helpful, Dan, thanks. We did get a number of questions just regarding the Pink Limited tier. So maybe we can just spend a few minutes talking about what that means for companies that already are on Pink Limited, or what Pink Limited is going to look like moving forward.
Thanks, Christy. This is Cass. I can take that one. So we have revised our Pink Current guidelines and our Pink Limited guidelines, of the information that's required by companies to qualify for each. And so those are publicly available on our website. Essentially, the Pink Limited tier and the information required under to be qualified as pink limited is more along lines of the bare bones what you need under Rule 15C211. Pink current goes a little bit above that. In order to meet those guidelines, you're going to need to have specific financial information and a little bit more than the pink limited guidelines. So both will allow a security to be quoted on an ongoing basis, but the pink current guidelines are more stringent. And with respect to the impact of being on one tier versus the other, brokers that are quoting those securities may place restrictions on the pink limited tier that they do not place on pink current.
And I'm just going to add one of the other things that comes into play when you look at current versus limited, certainly as it relates to international issuers, but broadly when it comes to blue sky laws. So as many of you know, companies that trade on our market are subject to the blue sky laws in the 50 states and the 4 territories. QX and QB, as we've kind of put out a lot lately, right, get you certain manual exemptions for the blue sky or in states for purposes of blue sky. That also is impacted depending on whether or not you're current or limited. So as an example, for companies that come in current that are making their information available to us, you would gain a state like Illinois as an example. So it will have impact not just on a broker's potential restrictions on trading limited versus current, but also on the blue sky status of individual states.
Thanks for that, guys. The next set of questions really fall around helping to understand how companies, if they do fall to the expert or the gray market, what does the process look like for them to get current again? How does that, is there a certain grace period involved? And really, how does that movement happen between those tiers after the rule goes into effect?
Sure. Let me maybe start with the grace period. I think that's, as you think about the timeline of a process like that, that's where we would start. So a company that has current information that then ceases to have current information, they're delayed in making a required filing, does go into a grace period for 15 days. That's under the rule, right? That's not an OTC Markets thing. That's a 15C211 thing. Following that grace period, if the information has not been made current, they would then no longer be subject to a public quote. They would lose their public market. For any company that finds themselves in that circumstance where they, regardless of whether they used to have a public quote or not, if somebody would like to apply for that initial information review, they can come to us directly. For an SEC reporting company or an international company, you'll likely be relying on disclosure that you have published through a separate regulator, either on EDGAR for an SEC reporting company or on your home country exchange if it requires English, if you are an international company. For a company that is using that catch-all set of requirements that Cass described, you would come in through our DNS product, through our OTCIQ portal, to be able to disclose. We will then conduct a review under the standards of the rule. That review includes, of course, ensuring that the required pieces of information are made publicly available, and also includes what's called a red flag review, going through some enumerated red flags that the SEC has set out as part of this rule to determine that a company has met its qualifications and that we can fulfill our compliance responsibility by making a publicly available statement that the security is now eligible for quoting by any broker. I'll pause there. I think that's probably enough on the process, but Chrissy, if there are follow-ups, please feel free to throw them in.
The first one actually came up a bit earlier, which DNS stands for Disclosure and News Service. So again, that's when we refer to DNS, that's what that in particular stands for. I think, Dan, one of the things that people are wanting a little more info about is the expert market. There's a couple of questions regarding our proposal on the expert market and just how that might work moving forward if that is in fact approved.
Sure, and I'll dive in, and then anybody else can certainly jump in as well. I'll take a step back. The idea behind the SEC proposing and finalizing this rule is that they believe if a retail investor has access to real-time quotations, to the kind of quote data that we put out in the security of a company that does not have current information in the market, then that retail investor is more susceptible to fraud. That's an opportunity for fraud, and that's what they're trying to accomplish through this rule. So in order to do that, they made a rule that says if there's no information available about a company, it cannot be the subject of those kinds of public quotes. The expert market concept and the expert market proposal that's out there is intended to be a catch-all that helps sort of ease that transition for a group of companies that are current at one point and then subsequently lose that status, subsequently go delinquent. So that when that happens, a company would, instead of just shifting to what we call the gray market, where there's just no quoting at all, would shift to the expert market. In the expert market, brokers would continue to be able to quote and message one another on a system like what we provide in order to achieve best execution for their customers. The difference, and I mentioned this earlier, is that the data, the real-time quote information that those brokers are putting into the system is not going to be distributed to the general public. It's not permitted to be distributed to the general public under the rule, under the way that proposal looks now. It could only be made available to this group of qualified experts, as the proposal calls it, which is mostly institutions and accredited investors. So it's a way to give effect to the SEC's concerns about retail investors seeing public quotes and being susceptible to fraud, while also not subjecting investors to the often unfortunate experience of owning or trying to trade a security that's in the gray market that has no electronic market or no electronic communication. It's really intended to kind of provide that middle ground.
Thanks for that, Dan. The next question, and I think this is covered within our PINK disclosure guidelines, but there's just been a number of questions in terms of the timing of financial reports that need to be made available, what that process looks like for an issuer to get to PINK current. So I know we covered that at a high level, but either Dan or Liz, maybe you guys can just dive into that a bit more, because there's been a series of questions around that aspect.
Sure, Liz, if you're comfortable, why don't you take this group of questions?
Sure. Hi, everyone. The process for an issuer to provide disclosure that would allow OTC markets to come to the determination that is eligible for a public quote is relatively straightforward. There is an application that the company would need to fill out. It's called our OTCIQ application, and it's available on our website. We're happy to send a link to that to anyone who needs it. You're giving us some basic information about the company and the officers. And what we do with that information is we make sure that we have all the appropriate information to allow a representative of that company access to publish information publicly on behalf of the issuer. So once we approve the application, we will send the authorized user credentials, user ID, password, that kind of information to access our OTCIQ portal and use the DNS, the Disclosure and News Service, to publish their financial information. And what exactly it is that needs to be published is described in great detail in our PINK disclosure guidelines. We have two sets of them. One of them is for alternative reporting companies, and the other is for banks. But it will go through and describe if a company wants to get to current information, this is the information that you need to disclose. If a company wants to be in the limited information tier, this is the information that you need to disclose. And I will say, Cass mentioned this earlier, but what we have done with our limited, the biggest change that we've made in those disclosure guidelines recently is to change the timing of the financials that are due specifically for the limited information tier. We actually lowered those requirements to line up more clearly with the SEC's guidelines. And it should be fairly simple for a company to qualify for limited information and therefore maintain a publicly quoted market. Really, the bottom line is we need an annual report that's dated for a period within the last 16 months. And we need the company to verify their profile information that's displayed on OTC markets to the public. Those are the two things that we need for companies to do to qualify for limited information. And if you go through and you do that and you're interested in sort of taking the steps to then qualify for current information, we're happy to work with you to do that. I hope that answers the question that you were asking. Christy, if I missed something, please let me know.
No, I think that does address it, Liz. Thanks for that overview. The next question, and again, I know Cass covered shells within her presentation, but there are a few sort of specific questions around the 18-month timeline regarding shells, as well as where they fit in sort of the broader scheme of the market tiers. So can you guys maybe just go into that in a little bit more detail to address those specific questions?
Sure. This is Cass. I'm happy to take that question and provide a little more detail on the shells. So the Rule 15C211 contains a provision that allows for the ongoing quoting of a security after it's first joined the market. That is referred to as the piggyback exception. So that piggyback exemption, what the SEC did with these recent amendments is really tighten that up. They now require current information, and there's restrictions on securities that are subject to an SEC suspension, and now requires priced quotes. And the other large requirement or significant requirement of that ongoing quoting rules is a restriction on shell companies. So under the new rules, starting on September 28th, shells are really not going to be able to be quoted on an ongoing basis beyond an 18-month period. So the way that it works is once for a new company coming on after September 28th, that is a shell company within the definition of the rule, which includes those that disclose their shell status in their filings. Those companies, starting from the point where they're initially quoted, so that first day that they join the market and a broker-dealer has a price bid or an ask in the security, they will be able to be quoted for an 18-month period after that. During that period, the concept is that the shell company will acquire or begin operations, and before the 18-month period runs out, that company will no longer be a shell company under the rule. So in this sense, the restriction operates very similarly to how we see SPAC rules on the exchanges. There is a limited period of time under which the commission wants to see a non-operating company become an operating company. That's kind of the philosophy and application. Dan, if there's anything I missed, feel free to jump in.
No, I think you covered it nicely. I'll just reiterate again, because I can see some of the questions coming in and want to make sure that we're providing it in as clear and simple terms as we can. So to Cass's point, any company that is a shell as of September 28th has 18 months from that date to be the subject of a public quote if it remains a shell. Any company that comes on after September 28th that is a shell at the time it comes on has 18 months from that period of time to be the subject of a public quote. If that company, regardless of what kind of information is being put out, if that company continues to be a shell after that 18-month period, it will no longer be able to be the subject of a public quote. We are obviously constantly talking to the SEC about the application of this rule. This is our understanding based on those conversations, but we'll also continue to push them to put out more specific guidance so that people are aware. But Cass kind of went through the reasoning. The SEC is looking at this as a business vehicle, but only for that 18-month period. And after that point, they see it as, I think, more likely to be involved in a fraud than they would feel comfortable with. And so they are capping it at that 18-month date.
Thanks, guys. And just to reassure everyone, because a couple of these questions have come through, we will be making this presentation both in the slide deck and the full recording available to all attendees and all those that registered. So rest assured, you will have a copy of this to refer back to, and all of the links to many of the items that we've discussed, pink disclosure guidelines, et cetera, are included within that presentation. Just in terms, Dan, there's been a couple of questions around the filing of 211s. Obviously, we talked about how there's some change in the way that that happens. So if you could maybe just expand upon when we may file a 211 or the process with FINRA for filing a 211 versus the current, that would be helpful to a number of the callers listening in.
Sure, thanks, Christy. And I think you're right. Let me start with the current process and then maybe explain the differences going forward. That's probably the best context. So right now, in order for a broker to initiate a quote, so really for a company to start being quoted on our market, a broker has to file a Form 211 with FINRA, go through a process of back and forth with FINRA. Ultimately, FINRA signs off on that form. And once they do that, we OTC Markets are permitted to open that security for quoting just for that broker that made the filing. And if there's more than one broker that files a 211 that gets cleared, we can open it just for those brokers for a period of 30 days. After 30 days, it becomes available to all brokers. Going forward, that avenue still exists, right? So it's really that there are two avenues. One is exactly the way it works now. A broker can file with FINRA, go through the approval process with FINRA. Once FINRA clears that, we will open up quoting for that specific broker. The other avenue that 15C211 creates is for us, for OTC Markets, to do that review. There's no Form 211 filing with us. This is the process we were discussing earlier, where a company will come to us. We will work directly with the company to determine whether the information is available, to either have that company come in through our disclosure news service product, or be on OTCQX or OTCQB for a really more streamlined review process. But we can conduct that review. Once we do that, we have to make it publicly available that we have done so and that we believe the company meets the rule. Then any broker can begin quoting that security. There's no guarantee that a broker will, but any broker can come in and start quoting that security. And then we have compliance obligations on the back end as between us and FINRA, but those don't implicate or those don't involve whether the company can start to be quoted. Once we make that determination, the quote will open up.
I would just add that for anybody that's had experience in filing a 211 with FINRA, and in many cases around Reg A, we've seen more recently, but even just generally speaking, that process of back and forth and Q&A, for many issuers, it's I'll use the word painful, but really the pain is around the timing aspect of it. You know, when will my security be cleared? And if you think about that in terms of, you know, in essence, that's a direct listing with our market, right? When will my security be available to be publicly quoted and traded by my investors? That could be anywhere from, you know, a day to months. What this process allows us to do is really make it a day. We're doing that process in advance of, and again, if I look at it from the context of QX and QB, as we're taking on the QX and QB application and doing the review to make sure a company is eligible, in essence, we're performing that role that FINRA was doing with the back and forth. So that for a company that wants to join QX, we can pretty much say, okay, if you want to join QX on this specific date, that full review will have been done and your company will be eligible for public quoting on that specific day. So it very much streamlines the process and gives us the ability to onboard an issuer in a way that's much more seamless and looks a lot more like the kind of IPO process or the direct listing process on an exchange.
Thanks, guys, for that. I know this was covered within the presentation itself, but there continues to be a few questions coming up just around the difference between the June 30th date and what was required by that particular point in time, and then the date of the rule actually going into effect. So can we maybe just break that down again for the audience in terms of why we actually asked for that June 30th compliance deadline?
Sure. This is Jason, and I'll take that. The June 30th deadline was really created because there's a tremendous amount of work that goes in to getting this information, making sure companies are up onto our IQ platform and have the ability to send in the information we're required and for us to do the review. The June 30th deadline was created by us for the sole purpose of being able to say that we know hand on heart that we would have ample time to be able to review those applications and get everybody up and running before the compliance date comes into effect on September 28th. I want to be clear that September 28th is a date that the SEC has put out there. That's not a date that OTC Markets has put out there. So anything that has not been reviewed, cleared, and marked as current on that date, irrespective of whether or not you called us the day before or you sent an application the week before, that company will be coming off if they don't meet the standard. So we created that June 30th standard so we knew that if we had it before June 30th, we would have ample time so that companies would not be impacted by our inability to get it done in a timely manner. That's all that June 30th was. Now, there's nothing to say that if you submit it on July 15th, we won't get to it before the September 28th deadline, but we cannot guarantee it. And that was the point of June 30th. So this rule goes into effect on the 28th. We are working diligently to clear as many of these as possible. We are in the hundreds of applications that have come in. We are in the hundreds of applications that we've approved, but they are time. It takes time. There's a lot of work that goes into that, and we will do the best we can. As I've said, the guarantee was if it was in by the 30th, we will get it done by the 28th, and anything after that is best efforts at this point.
This is Liz. I would like to add one thing to that statement. The reason that we put the date so early is so that not only we have time to review the applications, but that then companies have time to actually post their disclosure for us to then review. And I remind you of this to implore you that once you have access to IQ, please do not wait till the end of September to post your disclosure. Please do it as early as possible so that you and we can all be assured that you've met the compliance requirements for September 28th. So that's my plug for acting early. Thanks, Christy.
And Liz, just to build on that for 1 second, a few of our companies have asked if they already have DNS access or if they're already making disclosure available in IQ. Is there anything that needs to change? Is there anything that they need to do differently?
No, just keep doing it. If you already have IQ access and you're posting disclosure and you're in the current or limited information categories, you are doing what you need to be doing. There is one slight little thing. We are going to have to ask all of the companies that have DNS access to re-verify their profile. Sometime after next week, you should be getting emails about that. Please look for those and respond, in a timely fashion. There's some information that we have not previously collected from issuers in those profiles that is required by the SEC under the new 211 amendments. So that is the only thing that you really should be concerned about. Just keep doing what you're doing.
Thanks for that, Liz. Hopefully that alleviates some of the questions that we got in that area. Two other things that came up that are really more education-based. The first one, Jason, you mentioned this when you were talking, which was blue sky and why that's important. Can you just touch on that for a minute or two?
Sure. So blue sky are the individual state security laws really geared towards a broker-dealer's ability to sell securities to a retail investor. They're investor protection laws that each state has, really, again, around retail investors. And so it's important in that for securities that are not listed on a national exchange, in order for a broker-dealer to solicit or in order for a broker-dealer to distribute research or to trade in a security, a company needs to be what's called blue skied in that state. Now, there are a number of states that provide exemptions in different ways, shapes, or forms. There's different ways to get exemptions from that registration. One of which, obviously, as I mentioned, is a manual exemption that OTCQX gets in 37 states currently. There are other states that have rules that kind of get you there. New York has a rule that gets most publicly traded securities there. But they're outside of the manual exemption. There are individual laws in individual states and individual things companies can do to increase their coverage. One of those things that's coming out of this rule in particular is companies that make, international companies that make their 12G 32B status known to us. So their ability to be exempt from SEC reporting in order to trade here will be given a 12G 32B cleared moniker, if you will, which goes out in our compliance file to broker dealers and clearing firms, and that adds a number of states potentially to expand the number of states in which a company is blue sky. I don't know if Dan, you want to add anything to that?
No, I think that's the right way to think about it. It's state, when we talk about blue sky, it's state by state laws. And because of the vagaries of those laws, there are certain actions that impact just a few states, but something like Illinois giving credence to current information is going to be very valuable for companies going forward.
Companies that have access, I'll just add companies that have access to IQ, you'll be able to see your blue sky status. So one of the benefits of DNS and being current, it's also helpful from an investor relations perspective, QX, QB, DNS, the ability to see your blue sky status in individual states. And then, that should be a guiding principle perhaps on what your investor relations strategy is, if you're going on roadshows, if you have investors or employees in those states, how you may be able to have them buy and sell your securities, or maybe they're going to have issues in buying and selling your securities. So that's another one of the benefits of.
Just to clarify.
I just wanted to make one additional point.
For a couple of people that have still continued to write in questions.
On the 12G32B point that Jason just raised, apologies, Christy. For international companies, under the new rule, I wanted to clarify the various pathways to be quoted. So I briefly mentioned this earlier. There is an exemption that will be applied to many international companies based on trading volume, assets, and shareholders' equity. That exemption will not qualify you towards the current information standard. Instead, any international issuers relying solely on that will be placed in limited. International issuers that are making information available in English on their home country exchange alone without any further engagement with us, those will be placed in current information, but you will not get the benefit that Jason was just talking about of the additional blue sky certification. So in order to also get that benefit, you'll need to rely on 12G32B, publish your information in English in your home country, and engage and certify that you are compliant with that rule in order to get that benefit. So really 3 pathways that we're talking about for international issuers.
Thanks, Cass.
And one other quick sort of education point, a question did come in around the OTC bulletin board. Dan, do you want to maybe just talk about what the status of that is at the moment?
Sure. So the OTC bulletin board is a system operated by FINRA that allows for brokers to publish quotes and trade OTC equity securities, similar, although without as much functionality as our system. There are, at this point, no quotes that remain on the OTC bulletin board, and FINRA proposed, and the SEC recently approved, a rule that will cease operation of the bulletin board. So at some point in the next, it has to be done within the next year, it will likely be significantly sooner than that. That rule will be effective and the bulletin board will cease to exist. Effectively, that will have no impact on the way the market functions because, again, no brokers are quoting anything on the bulletin board now. For a long time, those quotes have been migrating to systems like ours because the private market has developed solutions that make more sense. So that's the status of the bulletin board. We will, I think, make people aware as that rule becomes final. But again, it shouldn't have much of an impact on what people's experience is trading or being a company with securities on the market.
Thanks, Dan. And Liz, just one other kind of follow-up question. We talked a lot about getting IQ access to be able to post things through DNS. I just have a couple of companies right now that are in pink no information and are just asking what the timeline looks like or what the process looks like for notifying them that they've now met the requirements to be either in pink limited or pink current.
Sure. Every time an issuer makes, sends in a filing through our OTCIQ portal, one of our analysts gets an alert, and we review that information, and either it qualifies you for limited or current information, or it doesn't. And at that point, we're either changing the tier of the company, or we're communicating with our contact at the issuer to explain to them, what the shortcoming is. So it should not be more than a few days that you're hearing back from us. At this point, I can tell you that timeline might increase over the near future as we have more and more companies to review. But it should not be more than 3 to 5 days. If that is, please feel free to reach out to us to ask those questions. But my understanding is that we're fairly timely at this point on that topic.
Great, thanks, Liz. And I think maybe just one other question. It's just a follow-up really related to the expert market. And maybe Dan, can you just clarify what broker dealers will see within that expert market and what that means from a dissemination of information as well?
Sure. So from the broker perspective, and I know it sounds confusing, but it's really not. From the broker perspective, they'll continue to be able to see each other's quotes. They'll continue to be able to message one another and ultimately agree to trades the way they do now. It doesn't give the brokers any additional access or authority or ability to affect trades or anything outside of exactly what happens now. The difference is that on our system now, or on the pink market going forward, or OTCQX or OTCQB certainly, those quotes, that information is publicly available. We put that out through our market data distribution feeds. It's available on the website for OTCQX and OTCQB companies. And so people can see the development of that market. For an expert market security, there is no public dissemination of those quotes. So again, you won't be able to log into your retail broker account and see what's happening, see the inside market, see the last quotes from a company that's being traded on expert. You won't be able to go to Yahoo Finance or any web portal and see that information. So it doesn't add anything to the broker experience, but what it does is limit distribution of that information to the general public.
Thanks, Dan. I think we probably have time for one more question, and then I will hand it back to you guys if there's any closing thoughts or anything more specifically that you wanted to connect on. Jason, I think this one's for you. We've just had a few questions. We've talked a lot about getting to pink current, but if maybe you could just spend a minute talking about why a company might actually want to go further than that and end up trading on either our QB market or our QX market.
Sure, thanks, Christy. I guess we'll end with a little sales pitch. No, obviously, the most important thing, I think, for issuers is to really understand the investor experience in a post-September 28th world. And whereas companies companies that were quoted pink current didn't really have to do anything, the investor experience was generally not that bad. You could buy, sell, as Dan said, you could see information on Yahoo or Google, and you could trade that security. In a post-September 28th world, that dynamic will change significantly in a number of ways. They're Pink Current and Pink Limited, as we've discussed, kind of changed a little. So the friction around Pink Limited comes into play for investors. The company's requirement to engage in one way, shape, or form now becomes an annual obligation, an ongoing obligation in order to maintain a quote, whereas before they maybe didn't have to even think about it. You could be Pink Current in perpetuity so long as somebody was trading your security. So that requirement to now engage and make your information available on an ongoing basis, and what that looks like, now you should really think about, well, if I'm doing that anyway, what kind of market do I want to provide to my investors? And is there an opportunity to provide a better market, to create more disclosure, to be more transparent, to avail myself of some of the visibility options that overlay the tradability that I've created through being a Pink Current company? And those are the types of considerations that a company should make when thinking about our QB or QX markets. Again, the added blue sky coverage, the ability to be featured in a lot of the visibility programs that we have around, video or podcasts or newsletters or market opens and those types of investor relations experiences, as well as the ability to, rather than bare minimum to get you current from a disclosure and transparency perspective, really supplement that through additional disclosure and transparency. And as issuers are thinking more and investors are thinking more about ESG, the level of disclosure, how a company complies with U.S. securities laws, being on QX and QB gets you from the bare minimum to maintain your public quote and really puts you into a place where you're more like your peers that are listed on a national exchange in terms of what you're doing to support your investor base and make your information available. I'll leave it at that. I think there's myriad other things that I can say, but we'll leave it there.
Thanks, Jason. I think with that, we've addressed the majority of the questions that have been asked by the audience. We will certainly do a review of these questions. We're going to continue to make additional content available, both on our website, on our social media channels. So if there's any frequently asked questions that somehow got missed today, we will make sure that we address those through those mediums. But just, is there any closing thoughts, Dan, Jason, Liz, or Cass, that you wanted to provide before we sign off today?
For the most part, I just want to thank everybody for participating and for kind of taking the time to understand the shifts to the market. Right, this is a rule that governs whether a broker can publish a quote, and it sounds like a small thing, and it has this outsized impact in so many different ways. I know that we've had with folks on the line and others conversation about the state of the OTC market and how the industry develops. This is going to be a shift. Right, a lot of the compliance obligations and a lot of the things that brokerage firms, that clearing firms, that other industry participants look at with respect to the OTC market are to protect themselves, or to believe that they are protecting themselves against issues with companies that aren't making current information available. So this rule, the implementation on September 28th, will, well, if you flip it to the positive, will really highlight the companies that are doing things that are compliant with the rule, and that are OTCQX or OTCQB or Pink Current under these standards, and will give the entire industry, I think, a different look at how the OTC market operates. And so we're looking forward to continuing not only to work with all of you on the implementation of this rule, but also with the industry as a whole as it gets reshaped through September 28th and beyond.
I think that's a great place to stop today. I think the only other thing we would do is just, if you did in fact miss the June 30th deadline, we would just encourage you to apply as soon as humanly possible. So just a little plug for our compliance team there as well. All right, with that, we will conclude today's session. And as we mentioned previously, this recording will be made available and emailed out to you in the next few hours. Thanks everyone for your time.